Yeah, hello and welcome to another update video about Polygon MATIC. Polygon is following Bitcoin and Ethereum in the very short term. We talked about some short-term upside potential here. If we can break this red resistance area, then we could have reached the next one, which the next zone here around 85 cents. That would have been the minimum, or that still is the minimum expectation if we break above this small red resistance area. However, as you can see, we moved above it here, this area, which is between 80.5 and you could say 81 cents. We moved above it with a daily candle on the 26th of December, lost it when we tried to retest with the next daily candle, and now put in an engulfing red candle. Now that is not closed yet, today's red candle, but if it gets closed, then we might see some continuation to the downside here fairly swiftly and fairly quickly. I mean, it's not invalidated, right? This could still push higher, but it's getting difficult now to maintain that view. But nothing has really changed. So still, the more rejections you get, the more difficult it will be eventually, I guess, to push through, especially if those rejections are quite impulsive. It's not like, you know, you get a little bit of a rejection and you push up straight away again. No, it's quite a strong rejection, but I think it's going to follow Bitcoin and Ethereum in the short term. We've seen that here in the very short term, in the last few days or so. It, however, on the daily time frame has a completely different structure of the June lows than Bitcoin and Ethereum. It's really only that here on the micro, in the micro picture, it's been following Bitcoin very nicely. So looking at MATIC, this is still, it's hard to say bullish setup in the current environment, because it doesn't seem to be the time to buy altcoins at the moment. I mean, everybody is sort of shying away from altcoins. We see a lot of altcoins currently dropping below June lows, dropping below sometimes even all-time lows. But yeah, MATIC is still holding actually fairly well if you compare it to Bitcoin, Ethereum, and if you compare it to many other altcoins, to be honest. So MATIC is one of the coins that is really holding best in this current bear market, you could say, at least at the moment. We have this situation that off the June low, we've got here a possible wave 1 to the upside, a 5-wave move, and a wave 2 is currently in the making in an A, B, C structure. And this C structure, or this C wave here, is currently in the making. It is an ending diagonal. These typically appear in 3-3-3-3-3 structures. What does that mean? It means that these subwaves typically have 3 waves, A, B, C, all of them. It's actually quite a common pattern, especially at the end of a bear market, or sort of get towards the end of one, right? Or generally in a wave C, you often get that. This is where we are currently here in this structure, where we've done a wave 1, a wave 2, and now we are, in my opinion, in this third wave down in an A, B, C structure, and this C wave has 5 waves. So again, we've got here a 1, and possibly we are now in the wave 2. Then there should be a wave 3, a wave 4, and a wave 5. And eventually this should take us sort of into the lower, let's call it the lower half here of this yellow support box between 47 and 60 cents. There is nothing really bearish until we drop below 47 cents. But the 47 cent level, if that's taken out, that is quite bearish. That would be quite bearish. So let's, however, take a look at the short term, because there was some short term upside potential, which is still there, which is still possible. But if it is still there, then it has been certainly delayed. What I can tell you is that this dip wasn't good. Yeah, we had an ascending triangle here. I mean, you could even argue this was, with the latest push to the upside, more like an ascending wedge, which, you could call then a bearish pattern. So always take a look at how these shapes can change and so on. Now we broke out to the downside here, and the move to the upside here was also quite weak on the 4-hour chart. I mean, that's not really anything that would suggest we're still moving up, especially this move up is also a 3-wave move at the moment on the 1 hour. So I'm not too convinced that this is still going to work out. I mean, the white count I can certainly take out now, because this is not anymore a 1, 2, 3, 4, 5. We could say that the wave 2 is currently here. That's certainly possible, but then we would really now need to start moving, and which shouldn't drop any lower. The drop below 77 cents would seriously reduce the probabilities of still going higher short term towards the 85 cent area. Then I think we are going to go down straight away without realizing any short-term upside potential. So keep an eye on that level. It's the 77 cent level. Why is that so relevant? It is relevant because if I look at the Fibonacci retracements of the wave A, in orange, yeah, we see that the B wave came back to the 78.6% fib level. And that's fine. Going below that level, however, normally significantly decreases the likelihood that such a move is still working out. So if we go below that level, it would seriously reduce probabilities of another short-term move up. At the moment, I can look at it purely as another ABC within wave 2. So A wave down, B wave up, C wave down. Also, we have, do we have 5 waves? Yeah, we have 5 waves down. 1, 2, let me just double check that. No, that's actually a bit higher, but I mean, that can count as a 5-wave move down. So you've got your 1, 2, 3, 4. You could get one more leg down, but it should ideally hold above the 77-cent level, right? So that's the point. That's the key. But yeah, other than that, the 77-cent level needs to be observed, and that we are going higher would be confirmed if we really finally break above this red resistance area. Then we can take it, or then the price can take us to around 85 cents, maybe even higher. But yeah, 77 cents need to be maintained. Yeah, we need to find support there. Currently, you can draw actually another trend line here. That's a very, very short-term trend line. By the way, I'm going to take out the other ones here because they get less relevant. Don't want to take out any wave counts though. But this trend line in the short term, I mean, going above that might be actually the first indication that a low is in here. It doesn't look like it at the moment. This is a 3-wave move, and the decline here certainly doesn't really open up the path for higher. If we do, we really need to break above this descending trend line, but the price structure at the moment doesn't really suggest that. You know, it doesn't look very bullish, and it seems like we're losing momentum here. We had some momentum, still quite choppy price structure to the upside, and the problem is that we didn't hold support, and we then broke out of this wedge to the downside and now can't even push above this resistance area. So all it does really is to confirm my expectation that we are going low eventually. And the thing is, if we don't even put a more substantial increase in, then this is even more bearish than I anticipated. But yeah, you know, it's a corrective move. You're going against the higher level trend, so sometimes these can be quite short. So that's where we are, and hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.